Does January set the pace, set the temperature for the entire year in the stock market? Well, it's been a good January so far. Got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Last year's a bad year in the market, right? We get one of those every 4, maybe 5 years, get a bad year, and it was, unusually bad because it started bad. We had one good day right at the beginning of January in 2022, and then it was essentially all downhill from there. We had a couple small rallies, but that's normal during a downtrend. And so it was just a bad year in the markets last year. January was bad, and the rest of the year was bad. Not only in the stock market, obviously awful year in the bond market, the worst year since the bond market index was created. In my understanding, one of the worst years in bonds total since the ratification of the Constitution. So challenging year. Thankfully, breath of fresh air, January 2023 is off to a better start. Does January set the pace for the whole year? I know there's no causation here, but if January is bad, does that usually indicate the rest of the year is going to be bad? If January is good, does that usually indicate the rest of the year is going to be good? It's not going to cause the rest of the year to be good, but does it tend to connect? Well, let's get into those details. The first is the January effect. Now, this is actually sort of stock market myth. And the premise with the January effect is that January is always a good month to be an investor. January is always positive. And the logic is sound. The research doesn't quite hold water, but the suggests that the myth doesn't quite hold water. The logic is, listen, for active investors in January, they're looking to make some stocks or some tax sales, whether they're going to sell their losers to try to capture some losses, which I think a lot of savvy investors would be prudent to do, or trying to lock in some gains. So there's going to be more selling in December and then buying back in January, right? If you're selling and you're aware of these wash sale rules, and so I've done some videos on those before, but if you're selling in December and you're going to wait 30 days or whatever and buy back, you're buying back in January, and that buying activity, the myth says, should boost stock prices. Well, in reality, the January effect isn't true. The research actually suggests that, about 60% of the time, January is positive, but it's nothing unusual. So the January effect, that January is always positive or should be positive because of this logic, doesn't really hold water. But there's a different side to the January effect, and that is what some are calling the January barometer, and that is that as goes January, so goes the year. That January sets the temperature, that January's performance in the market is indicative of what investors should expect for the year ahead. Okay, guys, there's some optimism here, right? There's some optimism. So take a look. When January is positive and positive more than 5% for the month, which, we'll see, turns out the final 11 months do end up better, up on average over 14% of the time. If we look at the first column, when January is positive, on average, the final 11 months of the year, which you can't say final, the next 11 months of the year, are up almost 12% when January is positive, okay? And higher 86% of the time. That's fantastic. When January is negative, the remaining 11 months, again, the stock market is obviously volatile, but does tend to go up. You can't guarantee anything about the stock market, but the pattern is the stock market hits all-time highs, it retreats off of those all-time highs, and then it goes on to make new all-time highs again. That's just the pattern of the market. So even when January is negative, the remaining 11 months of the year on average are positive, up less than 3%, but positive. So a positive January, at least historically, has really suggested you should be optimistic, maybe cautiously in this case, but cautiously optimistic about the remaining 11 months of the year. Up 86% of the time, on average about 11%, and when January's up more than 5%, those results are even more impressive. All right, now we're gonna go a little bit deeper. So Ryan here, someone that I follow, this post is really it's a parlay. It's parlaying several things together. So when last year's negative, when the previous year is negative, when there's a Santa Claus rally first few days of the year, and when January is positive, well, then what does that say? When that's been the case, the full year return of that year in that scenario where last year was negative, first 5 days positive, January positive, the full year return up 100% of the time. Guys, there's not a big data set here. It's only a handful of years, but every single time the full year return has been positive, up over 20-some%. An impressive return. So listen, guys, I understand the challenges that we're facing. Both the Fed has themselves in a pickle. Is inflation truly coming down? Will we see an economic slowdown? Will some of these job cuts continue? I'm aware of all of those challenges, and it's very tempting to say, yeah, even though the stock market moves before the economy looks dicey enough and uncertain enough that the short-term rally here in the stock market may not hold. Yet data tells us, research history tells us that we should be optimistic, cautiously optimistic, but optimistic nonetheless. And then finally, I'm going to throw in one more data point, also from Ryan here, one more data point, and we've talked about this before, the presidential election theory, the presidential cycle theory, whatever you want to call it. It has a few different names, but essentially it's look at the stock market return based on a president's term. And listen, I'll give you the short answer. Every year of a president's term is on average is positive in the market. Why? Because on average, markets are positive. If 80%, 75% of the time, 80% of the time, the stock market's positive for the year, there's really not a lot of connection to who's in office, and you might not want to hear that, but that's just what the data says. Who's in office or what year of their term. But the third year of the term, sort of the pre-election year, tends to be the very best of all 4 years. And January of the pre-election year, that third year, is on average the best year for those. So this also suggests, well, okay, maybe some more optimism for this year in total. And yeah, maybe this supports why January was so positive, sort of fits the narrative here. Okay, so what's the planning point? The planning point is lots of us have come into 2023 very skeptical of the markets, sort of beaten up and kicked while you're down based on 2022. Your stocks obviously go up and down, and there was really no place to hide there. U.S., international, real estate, emerging markets, large cap, small cap, mid cap, it was all painful. And your bonds didn't help either, right? They had their worst year since the beginning of the bond index. And so you feel hurt, you feel bruised, and you're sore, and you're looking at 2023, and economically, you say, gosh, there's about a bunch of challenges here, and the Fed is likely to make a mistake, and that could throw the stock market into even more turmoil. What's the planning point? This optimism, this historical perspective hopefully gives you some confidence, some reassurance that in the face of uncertainty, don't abandon your investment principles. Don't abandon your long-term investment approach and mindset, because at times when things may be awful, usually what that means is there's higher future returns expected ahead. And so will that pan out this year? Will the January barometer pan out this year, or will this be the first time since tracking this data that last year was negative, January is positive, first 5 days positive, and yet the rest of the year is negative? We'll see. I doubt it, just based on how reliable that research is and the data is, but we'll see. Okay, work with your certified financial planner. If you're too conservative, if you're too concerned, if you've got too much on the sideline, work with your certified financial planner, and don't say, well, I'm going to go from cold to hot. No, what's a prudent investment approach, investment philosophy, multiple strategies that you can employ to help you reach your long-term goals. That it's going to be an appropriate approach for bad times, but also for good times as well. Work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.